Hello and welcome to Season 2 of the Recruitment Leadership Podcast, hosted by Alison Humphries. The Recruitment Leadership Podcast is here to help those in the recruitment industry gain awareness and understanding on the hot topics faced by those in the business of hiring people. In each episode, Alison Humphries is joined by a fellow expert to offer professional knowledge, insight and advice on the biggest subjects affecting recruitment businesses. In this season, we're focusing on the fundamentals of financing your recruitment business, including the questions commonly asked and the different scenarios you and your business may find yourself in. It's the podcast to listen to for recruitment business frontrunners seeking expert information from industry-leading advisors. Welcome to the Recruitment Leadership Podcast.
So welcome to the second episode of Season 2 of the Recruitment Leadership Podcast. And I'm back with Nick Russell, the Commercial Sales Director of Sonovate, who, as I'm delighted, has agreed to talk to us today about the changes that we're seeing in the recruitment market generally, and in particular how they might affect your financing arrangements if you are a recruitment business owner or director. So this episode will be of interest, I think, to businesses of all sizes, wherever you are on the kind of developmental curve. Nick, welcome. Leaving aside the B word, Brexit, we are in an environment where it looks like there's going to be increased regulation. And of course, in 2020, we've got the IR35 changes due to be rolled out in the private sector. Now, those had a major effect in the public sector. We can go into a bit more detail about that. But at very high level, what effects do you predict and how might funding be affected for recruiters?
Morning as well, Alison. Thank you for having me here. I do think that IR35 will have an impact. As you stated, it clearly has in the public sector, and we've seen this with clients of our own. GDPR, I don't think came with the effect that people predicted. Mm-hmm. I think there was a lot of hype and confusion and fear around GDPR. But I think really that only related to the really big corporates out there that it's affected. With IR35, albeit the legislation came out in 2000, didn't it? I do think next April it will have an effect. I think the agencies should seek legal advice. I think they should not advise their contractors if asked without legal advice, and there's people, if you want to contact me or obviously yourself, Alison, that we would recommend you speak to on that. It'll be interesting to see what they do, because the contractors are either going to have to start paying tax or NI, or are they going to go via umbrella or PAYE solution or even sole trader maybe, but then do they have as much protection? I wouldn't have thought they would do.
Yeah. Okay, so There are an alarming number of recruitment business owners, and I'm talking even quite substantial businesses that have contractors out who are, hundreds and even thousands of contractors in some cases, who are actually putting people on outside IR35 arrangements now because the contractor tells them that they are outside IR35. Mm-hmm. Now, for any of our listeners who aren't aware, the IR35 status of a contract assignment is not decided by the contractor. It's decided by the facts of the assignment. So the same contractor can be inside IR35 on one assignment and outside it on another. So I don't know if you agree with this, Nick, but one of the first practical steps I would suggest that people put in place now is to make sure that they have some kind of due diligence when they take the details of the assignment. Yeah. To check whether the person will be working under forms of supervision, direction and control. And my observation would be that a lot of, even established businesses do not have anything like that at this point. Do you agree?
Absolutely. They need, before the contract commences, absolute clarity of whether they lie in or outside of it.
Okay. And then you mentioned statement of works. So there's a lot of interest in this, and a lot of people thinking, well, I get the idea in theory, but how does it work in principle? Who's responsible for delivering on that statement of works? How much do I need to know about what my contractor's doing? Am I the person responsible for completing? So how do we think this will affect financing of recruitment contracts, if at all?
I think it's already affecting it. So a lot of consultancies, slightly different to recruitment agencies, but in essence still providing manpower, albeit it's treated as a project, and they do a lot more research and work with the customer in depth regarding what the project is, not just placing the contractors, so to speak. Work off statement of works or MSAs, managed service agreements. And a lot of the funders don't like this because there isn't that deliverable of a signed timesheet, or if there is a signed timesheet, sometimes it's signed off by the contractor. So, for example, recruitment leadership places 10 contractors on a statement of work, so they call it a squad sometimes, and they have different milestones that they have to hit over maybe a 12-month period, and that's broken down quarterly, and there'll be obviously fees associated to that, which are stipulated in the statement of works. There may be a captain of the squad who signs off the timesheets, but in essence that is a self-signatory. It's not the client who is signing off the signatory, the contractor signing off his own timesheet. Now the funders won't take that as sufficient sign-off because it's self-signatory, and they don't like it. Sonovate, we've done a lot of research into this, and assuming that we can get a authorization to invoice or evidence that milestone has been reached to a satisfactory standard, then we will fund those invoices, because it's still for the provision of manpower, but we just need to understand exactly what that looks like and when the milestone has been reached, and that there is a form of acknowledgement from the client that the work's been completed to a satisfactory standard.
Indeed. And there's been some case law recently in relation to defining statement of works and whether someone was actually outside IR35, where the language was a significant factor. So having a review of recruitment agencies' documentation makes sense, doesn't it?
Yeah.
They should check that if they are claiming someone's outside IR35, the language isn't around timesheets and hours worked, but around projects completed, that a client can still sign off. An end client can still sign off, can't they, and say this project has been completed by this date.
Yeah, and the first thing that I do and Sonovate do is when we look to fund an agency or a consultancy that is working to a statement of works, we want to see that. We want to look through it. We want to see how prohibitive it is, and the agency should want to as well, because these are quite comprehensive documents that basically are the structure of work for that squad of 10 contractors for maybe the next 12 months. So they have to be watertight. They have to be robust as well. So we very much believe that we can fund those statement of works, but the first thing that we would want to do, and the agency should, is absolutely going through it with a fine-tooth comb and understanding where you lie, where the liability is, and why they are in or outside of IR35.
Thank you. Okay. And so what about day rates versus hourly rates? In your view, is that going to be a trend of contractors being hired on day rates more going forward as an indication that they are not under supervision, direction and control?
Yeah, or even more so kind of project rates. So these people are getting a fee to complete a project, but if they do it in a quicker time scale than anticipated, then they would bill, say, £10,000, whether they do it in 3 weeks or 4 weeks. So that then doesn't just remove from the hourly to day rate, but it's actually justifying that it is compliant, because it's then project rate, which would deem that they can't be seen as an employee of the business, can they? Because they are a project provider. So I do think, in answer to your question, you'll definitely see a change from hourly to daily, if not daily to project.
Basically, yes, very good point. And of course, there's downs as well as ups on that, because clearly, if a project isn't delivered to the right standard, then someone who's genuinely outside IR35 has to make good at their own time and at their own expense.
Well, there's that as well. Yeah.
Okay. So that then leads into whole other areas of protecting your business. So if, as expected, we do see this roll out, and remember it applies to pretty much every private end user client other than those defined under Companies Act 2006 as small companies, then it then begs the question about should recruitment business owners be reviewing things like their professional indemnity insurance, employers, public liability. Actually, there's a lot of other insurances that people perhaps should be looking at. Key man insurance springs to mind, cyber and data risks insurance. Can you comment on that? How prevalent are these in recruitment in your view?
I think that they're prevalent, and I think the IR35 2020 introduction is a real good catalyst for agencies to review all these documents. These are often things that they take out at the beginning of their journey as a recruitment agency, and they don't review, and they put it in that folder or in that file, that drawer, and it collects dust, but they kind of know in the back of their mind that they have got their insurances and indemnities there. I think this is a perfect time to go back to the market as well, to seek professional advice, and check that you are abiding to all the legislations, and that you are protected yourself as an agency, and that your contractors who listen are the extension of your agency. Let's be real about that. That they are covered as well. Key man insurance, it's a deep area that a lot of brokers sell it, but it can be quite distorted in what it actually covers you for. So I would say with any of these insurances or liability protections, you do your due diligence, and it's a good time to go back and research into it.
Okay, so key man insurance can be particularly relevant if your business is completely dependent on a few key billers supported by a number of other people who effectively provide, for example, resourcing or research services to them, and if that person's long-term absence would seriously damage your business. So it might be that you're a micro business. It might also be that you're a business that is looking to grow or even go to market at some point, and is very dependent on having continuity of those individuals. And actually, you can get it at very low cost, ranging from about, I don't know the quality of these products, but ranging from about £8 per month per person.
Right.
So it's certainly worth looking into, even for some very small businesses, I would suggest. Nick, you just made an interesting point, so linking through the whole IR35 thing, that a contractor who is outside IR35 must have their own professional indemnity insurance, mustn't they?
Yes.
And typically, if end clients are imposing contracts on you, they will demand about £1 million worth of cover. So it's not a question that's usually in our screening process for recruiters, but my recommendation is they should bring those screening processes in now, and also keep your insurer up to date about what you're doing in your business. I did have an example of a case where a small company that I was talking to had basically insured for a fixed sum. There was a limit on the cover, and they had simply failed to increase it as their business had grown. And the repercussions of that, unfortunately, because they had a claim from an employee, were quite substantial, and they weren't insured at the right level. So going and having a look at your employers and public liability, the levels of it, is really key.
I think also, if you look at a recruitment company and its expenditure and overheads, obviously all these tools help and assist, but they spend thousands on CRMs, on analytics, on finance companies, on incentives. All these things, pay it for your insurance as well. It's not going to be the most glamorous exercise of your life. Mm-hmm. It's not like looking through your margins at the end of the quarter and seeing what your EBIT and your NFI is, but it is something that protects your business. And if you have to pay more to protect yourself, then do so, because you would definitely do that with your clients. You know, you pay for insurance on your clients, etc. You want the most up-to-date analytics technology and CRMs. I think, like you say, for £8 per person, even if it costs more, it's definitely worth doing.
Thank you. Okay, right. So we touched earlier on GDPR, and the general consensus does seem to be that it hasn't, in the end, been quite such a disruptive piece of legislation as it was before the implementation date. In other words, it was one of these pieces of legislation where there was lots of rumours and horror stories about what could happen, but in fact it hasn't really impacted too much on certainly those businesses who have chosen to roll out a decent system, clean up their databases in many cases very positively, and get real engagement from candidates who were asked for consent. However, what GDPR does do, of course, is massively increases the liability of anyone who has a data breach. So from a financing and funding point of view, are there any impacts, insurance, implications that you think business owners should be looking at if they haven't already done so?
From a GDPR perspective?
Well, just data breaches generally.
It's something that we again have to be impartial to as to what we advise them to take out. But I think a cleanse of your data, I think it's a really good exercise actually. Whilst it was a lot of scaremongering, and I think there were people profiting from GDPR, and it's almost like the kind of the PPI world, and there were people setting up GDPR claim companies, I heard as well. So I think it all kind of unfolded, but what it did do is it made the agencies cleanse, as you say, consent and be compliant from a data perspective. But I wasn't aware actually, Alison, that you could get protection on a GDPR perspective. So do you mean if you do breach it and you don't comply?
Yeah, so it's basically insurance to cover any data breach and any claims that might be brought against you for a data breach. And while there's a lot of checks and balances before people will give you those insurance policies. Are you aware of clients of yours taking them up?
We have heard of it, and it's not something that, as I said before, we advise on. But I think the reason why people have done it is whilst they might cleanse their database and they might act in the right manner, they can't speak for all their staff and their consultants, and that is the people who will make the breach or the error, won't they? So I think to have a encompassing insurance over the business, because you can't control what your staff will or won't do, will you? Especially as we know, in recruitment it can be quite a high turnover of staff as well, and how loyal will they be to the business with regards to a data protection perspective. So I think it's certainly something, as with most insurances, hopefully you'll never have to claim on it, but it's there, isn't it, for when you need to. Yeah,
and a note to business owners and directors there that because of the particular way that recruitment industry works, your consultants are carrying a lot of confidential data, very often on their personal mobile phones or laptops that go out the office. Fair point?
Absolutely.
And I've seen a lot of data protection policies in staff handbooks that simply don't address that situation. So you would not have cover or a defence unless A, you've got an up-to-date policy, and B, you've actually trained people in it, and your policies and processes are reflected in what goes on in real life. So well worth having a look into that insurance. Up until now, the ICO, by its own admission, has largely taken an advisory approach where small companies have been accused of data breaches. A lot of their focus has been on tech giants, the Facebooks and so forth of this world. But eventually they will get round to recruitment businesses. So if it's not something you've looked at previously, have a look at insurance now. Now, on a separate note, a number of businesses have asked not about invoicing finance for temporary and contract workers, but for perm invoices. So I'm curious whether you think this is something that is becoming more widespread. Why would a recruitment business owner want to finance their perm invoices, Nick?
Again, there's no right or wrong as to why they would want to, but the simple answer is to access and leverage more cash from their debtor book. So your mainstream lenders will do on contract 85-90% as a standard. Sonovate, as we know, are 100%, which should suffice to run a recruitment company, you'd like to think. But some people either want to scale that quickly, that they want everything out of their invoices, including their perm invoices, or they might require that money to keep the business in existence. You know, they may have had failing quarters, or they may have had bad debts and they weren't insured for them. They may have HMRC obligations, or it might be that they just want to get their money out of the invoice and scale it into making more money. They might not actually be cash strapped, but they see that asset, they want to they see it as that it can be made into liquid form, as in cash, and then they can get more staff in, they can get a new office. It's cash flow. So while some people try to avoid funding any invoice, be it contract or perm, and they want to self-finance, and there are, you know, reasons to do that, of course. There's no cost of finance being the obvious one. A lot of people think that it's a benefit to have the ability to fund perm invoices should you want to. From a logistical perspective, if you have a consultant who's dual desking, so they're placing on both contract and perm, and you're using a Sonovate, for example, do you want to have to get them to pay the contract invoices to the Sonovate trust account and the perm invoices to the agency? Because again, you're saying to the accounts payable department you have to pay two different accounts now, and they probably won't do it, or they'll send the contract one to the perm and the perm to the contract,
Right.
and it becomes a nightmare. Secondly, if you do assign your perm invoices, then you would benefit from them being insured. So if you did unfortunately have a client who became insolvent, but you didn't assign your perm invoices, you would only be insured on the contract side and not the perm side.
Ah, okay.
And thirdly, apart from obviously leveraging the cash from the perm invoices, Sonovate, for example, conduct the credit control. So whilst you would have us credit controlling the contract invoices, you wouldn't have somebody doing that on the perm side. So a lot of people see it as a benefit that they can have it all covered under one roof with the ability to draw down on it. Clearly you don't draw down at 100%, but if it's backed up, we would normally prefer perm invoices that are raised on commencement. Some people do raise them on acceptance, which again, if there's controls around it, it can be funded, but clearly you're more open to rebates then, because they haven't even started work at this point, and are they talking to other agencies about other roles? You know, are they actually going to commence that role that they've accepted? But yeah, we do see, and I'm not sure why, but it's the larger agencies tend to fund their perm invoices. The smaller, or when I say small, anything from New Start under say 2 or 3 million turnover, I don't personally seem to have a requirement for them to fund their perm invoices. The larger ones, I'm talking, 15, 20, 30, 40 million plus, they do. And once you start funding your perm invoices, it's almost like a drug. You can get addicted to it because you're used to leveraging that cash.
Yes, that's a really good point. But what you're saying is that if there's very clear evidence that you can, by using the cash, for example, hire or gear up in a fast-growing market, then that might be a justification.
Absolutely. Yeah,
okay.
You're spinning your cash, aren't you?
Interesting. Now, you mentioned credit control there. I'm just wondering if Sonovate staff, for example, are seeing any new trends in terms of delivering the service that they do, for example, with credit control, fee disputes, anything like that. So you mentioned about perm terms being based on acceptance or commencement. Are there any changes that you're seeing at the moment?
We're seeing a lot more people want credit control. It used to be frowned upon slightly as a part of a factoring product. They didn't want a third party, in essence, conducting their credit control. From a Sonovate perspective, we're different because we're only dealing with recruitment companies and consultancies. So we talk the recruitment lingo, and it's also because we've got north of 1,000 agencies who have a Sonovate account. It's likely that your clients or debtors we're already talking to from another agency, so we've already built up that rapport, we've got that relationship, we know that accounts department already. We're seeing a lot more POs now, and it often an accounts payable department won't confirm a balance or pay a debt if the PO isn't on the invoice. Now obviously that's agency specific, whether they have to work with POs or not.
So just for our listeners' benefit, that's a purchase order number,
yeah.
System. Yeah.
So normally what happens is the purchase order might take a couple of weeks to come through and then you assign it to the invoice, but normally that purchase order would relate to the length of the contract, i.e. you're not getting a purchase order for each invoice. It would relate to the 3-month contract, for example, and once it's instated, it's in place then.
Right, couldn't agree more. And quite often, there's no incentive once the person started for anyone to give you a purchase order, is there?
No.
You've done the work. So it can leave that invoice in limbo for a long, long time. And there's a really simple solution, which is actually templates for doing things went out of fashion quite a long time ago in the recruitment industry.
Yeah.
But you know what? Going back to an old-fashioned template that is used in a conversational way, but that has a box for is a PO number required, can be a really useful solution to that. And then, in fact, a lot of the questions that people should be asking about assignments, like supervision, direction and control, if those were dealt with up front, we could resolve a lot of issues or eliminate them potentially.
Yeah, it's good housekeeping, Alison. It's like when you take on a new client and you're using a financier, before you go and place 30 contractors with them, check that they're creditworthy and that your financier can fund them. Because I've had it so many times where someone says, Nick, fantastic, I've just landed this job, I've got 25 guys starting next Monday. I'm like, okay, who with? And they're like, oh, hold on, they've only just incorporated, I'll get you the reg number. Well, they've only just incorporated, so they're kind of 0 rated only because they are a new company. So we may struggle to get credit, and that's not Sonovate, that's any funder. Checking that is a PO required. Well, you can't raise the invoice till you've got the PO. Get the PO as soon as you can. Check what terms they're on. You know, I've had people who have said, yeah, we've just signed up a new client, we've got contractors starting with them, and they're on 120 days. Now, again, funders don't want to hear things like that. So, as I say, good housekeeping. Obviously, it's the kind of euphoria of a salesperson placing contractors. That's great, but just check that it's all provisioned in how the invoice will be sent out, collected, remittances, purchase orders, insurance, etc.
It's interesting because, of course, the big, great shining hopes for a lot of recruiters is exciting, sexy startups now, isn't it? So if you work in, say, supplying developers or marketing staff, startups can have a huge requirement for those people right from the outset. Let's say they're setting up some sort of new e-commerce operation. They can have what sounds like plenty of funding, but no real means of actually settling invoices for quite a while. And recruiters, you're right, they do tend to get quite excited about what looks like a high growth option and not dig below the surface, don't they? Okay, so check for purchase order numbers, use templates where possible, credit referencing,
definitely,
really
especially
important.
if you, like you said then, if you're placing with a lot of tech companies, because obviously they've just started out. Now that they will, majority of them absolutely grow and scale, but unfortunately at that point in time, they from a credit perspective will be 0 rated. However, having said that, by virtue of the fact that they are a tech company, they may have had significant investment. Go and check that. Can you get evidence of that? The funder will listen to that. Is there a parent company? Can you get a parental guarantee, etc.? So it's not always the computer says no scenario, but give us as much. You talked about due diligence before. Give us as much evidence and information and collateral on your clients, and we can then make a commercial decision on that.
Great. Okay, thanks. So an increasing number of companies that I talk to have, during the whole run up to Brexit, have decided to look at incorporating overseas, different countries for different markets. Yeah, what is the effect if you are using funding from a business here in the UK?
So we are seeing a lot of this, and you're right, and it's clearly because of what will or won't happen with Brexit. So a lot of companies, more in the kind of IT, tech, pharma, engineering spaces, more white collar, are setting up foreign subsidiaries. And to the listeners who don't know, typically if a recruitment agency places contractors overseas, it's classed as an export debt. So the invoice is being raised from the UK recruitment entity, but it's to a foreign debtor. So you'll be paying them in euros, you'll be invoicing in euros, and it's classed as an export debt, of which most funders will fund, but only to a degree. Sonovate have a broader outset on that. And we understand that in 2019 there isn't a great deal of difference of placing people in the UK or in, let's say, the EU. Clearly, countries of political risk we have to take a view on. But from an export perspective, we are very comfortable with that. Now, what people are doing more so, though, is setting up a foreign subsidiary to remain, let's say, in the EU. So, randomly, a lot of agencies are setting up in Southern Ireland at the moment, we're seeing. Now, from a funding perspective, it does get very different because 99% of UK invoice finance, FinTech, bank, funders, so to speak, can't fund foreign subsidiaries, because legally they don't have jurisdiction to take assignment of invoices raised in a different territory. Right. Now some do, don't get me wrong, but they're specific to different countries. So Sonovate, for example, can fund in some mainland EU countries. We can fund US subsidiaries. We've seen a lot of, obviously, IT and tech companies setting up in the US, and what fantastic margins they make, by the way. But how do you get funding for that? So often they will have an office in that foreign country, but their operations are still managed in the UK by their ops director, by their FD, etc. So it's not ideal to have two finance solutions, one in the UK and one in another territory. So it's definitely worth speaking to me if you have a foreign subsidiary in the EU or in the States, or just for a chat about what jurisdictions have options for and what don't, because it is a bit of a minefield. The US, for example, is renowned for it's very old school invoice finance, so you wouldn't have thought it, but it's quite archaic. The terms are very prohibitive. They want 2 years trading history, they want personal security, their fees are extortionate. Now, how can you give 2 years trading history when you just set up overseas? So it is a problem for some agencies. Do you then do you use your own cash? Do you fund it off the balance sheet? People don't normally want to do that, hence why they're using invoice finance. Do you get external investment? Do you take loans? But again, it's not relative to your turnover. It's almost a pot of cash that you think you're going to use, and you will use without doubt, but it's not relative to the turnover. Whereas with Sonovate, for example, the money that you're using from us is relevant to your turnover and your invoices, obviously.
Indeed, yeah.
So yes, it's causing people a solution, and yes, a problem, and yes, we are seeing more and more people setting up overseas.
Okay.
Normally owned by the UK company, obviously.
And obviously, listeners, if you'd like to talk to Nick about the financing aspect of that, or any of the operational launching aspects, talk to me. Final question for this episode then, Nick. Very quickly, what are the key questions that a recruitment business owner should ask themselves or ask the potential candidate when choosing a financing partner?
I think the key word there is partner. Alison, you've worked with a lot of recruitment agencies, and the lion's share of them want to scale, want to grow, and want to exit, don't they? And to do that, they need cash. So I think first and foremost, whatever size you are, whether you're new start, whether you're established, whether at any part of your journey, make sure that the finance partner you're with it is a partner who can stay with you for the foreseeable future. People change finance partners every day. Obviously we see this all the time, but you don't want to be doing it all the time, ideally. So do you have a partner that can facilitate growth, or will they have a ceiling that they are only comfortable going to? And when I say that, they may put a funding cap in. Once you hit it, they will extend that and increase that, probably with a fee and probably with provisions that you have to put a proposal to the underwriters, etc. It has to be sanctioned. But others may just say, we won't fund companies who require funds in excess of an amount of money. So I think that's a key one. How flexible are they as well? You all have heard of concentration limits. You know, are they going to be prohibitive on your debtors, that any one debtor can't dictate X amount of X percentage of your debtor book? Export that we touched on before. Will they fund export? If so, to what level? What's the prepayment they're giving you? If they're only giving you 85%, for example, but your margins are under 15%, then you're not covering your contractors' cost, are you?
Right.
So I think ensure that you're getting the right facility size or the ability to continue to grow as and when you need it. The flexibility within the ledger, so can they accommodate your debtors and the concentration levels, ensuring you're getting the highest prepayment you can. You know, obviously we do 100%. You're not going to get any more than that, clearly, but we do see people who are getting, you know, less than what they're paying for. Don't tie yourself into a lengthy contract. What, you know, whilst you don't want to leave, ideally, your funding partner, if you have to, but you're tied up for 12, 15, 18 months and more sometimes, then there are significant penalties to pay to leave. We don't charge any minimum fees. So, for example, when you forecast what your next 12 months turnover will be, and we give you a service fee based on that, some funders will say if you don't hit the figures you've said, i.e. the return we should get, then you have a minimum fee of X amount that you have to pay.
So that could end up being very expensive, couldn't it?
Well, yeah, so you could actually end up paying them fees all year, but then you have to top up because you've not hit the estimated figure that they thought they would receive. Personal guarantees, they are becoming less common in the invoice finance or ABL world, asset-based lending world, but a lot of funders take them. Now, if you're taking capital outside of the debtor book, i.e. a cash flow loan or a term loan or something like that, then I think it's fair that you would ask for personal security because there's no asset to back that up. However, if you're taking an invoice finance facility, they've got a debenture of the business, so they own those invoices in essence, so I don't believe you should have to give personal security unless there's a reason historically why a funder would want that as extra comfort, so to speak.
Right, so some really good practical tips there, and in short, think long term when you enter into an arrangement like this, and think what might your business want to do within the course of the next few years. Is this partner capable of walking that journey with you?
Yeah, and what can they do for you? You don't want to have ideally loads of different suppliers, you know, so Sonovate will do your financing, they will do your insurance, they will do your credit control, they'll do your timesheets if you want. We integrate with your accountancy software via API. Automation is a big thing now. People don't want to have too many services within the business, and they want it to be all linking in and integrating as well. Everything's on your phone now, isn't it? You know, your accountancy software, your CRM, your financing. Why wouldn't you want it all to integrate smoothly? That's obviously the world that we're going into. But the services that your funder provides, hopefully that will cover everything that you require, as opposed to going to market and having to have 3, 4 or 5 of different suppliers, which basically run your financing, your contract book.
Okay, so I hope that you found that episode both interesting and informative. If there's been some issues raised that you'd like to discuss further, you're welcome to contact Nick or myself, Alison Humphries at Recruitment Leadership. This podcast has been produced by Generation Nexus, who will also be providing the contact details for us. Nick, thank you very much for your input on that episode, and we'll see you on the next one.
Pleasure, thank you.
You've been listening to the Recruitment Leadership Podcast. If you enjoyed our podcast, please subscribe, review and share so that others can find the podcast too. We really appreciate your support. If you have any questions about the topics covered or wish to find out more about recruitment leadership and Sonovate, please email alison@recruitmentleadership.co.uk referencing the podcast. We're also on LinkedIn, where you can follow Recruitment Leadership and connect with Alison Humphries. Thank you for listening, and we hope you join us next time for another episode of the Recruitment Leadership Podcast.